Hello, welcome to another section of RAD Academy tutorials. So, in this video, we are going to take a question on the expense account and we do it together for you to understand the preparation or how to prepare the expense account in case you find it in any question like single entry and incomplete reports or account for non-profit organization. So, here is the question. So I've just picked the expense part of the question to just solve with you, not the whole question, as in single entry or accounts for non-profit organization. So when you look at this question, we have insurance prepaid, and we have a date 1st January 2024, which is 1,700, and we have 31st December 2024, which is 3,142. And we have rent and rate owings, which is 2,940, and the closing balance is 3,400. And the amount that was paid for rent and rate is 12,000. And the amount that was paid for insurance is 18,000 for that particular year, which is 2024. So as soon as you see this, the amount that is paid for insurance is 18,000. But then there is insurance prepaid in the question where it has an opening balance and what? A closing balance. Immediately you see that, then it means you have to open an insurance account and know the exact amount that is for only the 2024 only. So you open your insurance account nicely. Insurance account. So with the insurance accounts, you ask yourself, insurance prepaid. You ask yourself, insurance prepaid, is it an asset or a liability? That is the first question you ask yourself. And expenses prepaid is an asset. So therefore, insurance prepaid is an asset. And all assets have a debit balance. So it means if it has a debit balance, it is an asset and it has a debit balance. And it means the opening balance will be on the debit side. So you say the opening balance is 1,700. So balance brought down is 1,700. And if the opening balance is on the debit side, then the closing balance will be on the credit side. So we write balance carried down, which is the closing balance, which is 3,142. So when you are done with this one, there is no insurance owings. So the amount that is paid for insurance in that particular period, which is 18,000, you always find that on the credit side. So in some of the questions, they don't even tell you, they don't even give you the cash book and you see it on the credit side. But then they'll just state that the amount paid for insurance is 18,000. You should know that if it is paid, if it is insurance paid, then definitely to be on the credit side of the cash book. So always the cash book will come to the debit side of the expense account. It will come to the debit side of the debit side of the expense account. That is one thing that you have to know. So he said the amount paid for insurance is 18,000. So we come here and write cash book, which is 18,000. So when you are done with this, then you do what? You balance your accounts. So we add the debit side, and when we add the debit side, you will get 19,000, 19,700, 19,700. It means that the difference will come here. The difference, we don't say balance carried down because we already have balance carried down here. So that difference is what will go to the P and L account. That difference is what will go to the P and L account. So when we find the difference will give us 16,558. So we sum it up to get the 19,700. So that is it. So balance brought down here is 3142. So this amount is what will go to the P&L account. So when you're preparing your trading profit and loss account and you get your P&L account, the amount that will go to the P&L account as insurance is 16,558, not 18,000, not 18,000. So that is it. Now let's prepare the rent and rate. So with the rent and rate, you have rent and rate owings. Rent and rate owings, and the amount that was paid for rent and rate is 12,000. So since we have rent and rate owings in the question, then it means that we need to prepare a rent and rate account. So even if the expenses you are seeing such thing for, like say, 3 or 4 expenses, you have to open an account for all the 4 expenses. So this we are going to open the rent and rates account. So rent and rate account. So when you come here, we have rent and rate always. You ask yourself rent and rate because they are balances. So we need to put in the balances. So what you need to ask yourself is rent and rate always, is it an asset or a liability? Expenses always is a liability. And all liabilities have a credit balance. So rent and rates will have a rent and rate always will have a credit balance. So it means that the opening balance will be on the credit side. So we have a balance breakdown, which is the opening balance of the rent and rate always, which is 2,940. So if the opening balance is on the credit side, then you should know that then the closing balance will be on the debit side. That is what you should know. Balance carried down, which is 3,400. Then you go to the cash book or you look into the question and look for the amount that was paid for rent and rates for that particular period. Or that amount that, yes, that amount that was paid for that particular period. So when you look at the question, rent and rates paid for that period is 12,000. And you should always know that it will always be on the credit side of the cash book. So if it is on the credit side of the cash book, then the cash book will also come to the debit side of the expenses account. That is the double entry. So we say cash book on the debit side, which is 12,000. So when we say we are balancing this, then we add the debit side. We add the debit side to get 15,400. So when we add the debit side, we get 15,400. And when we less the credit side from it, then we will get 12,000. So the difference, we don't say balance carried down, but then we see the P&L accounts to show that this is the amount that will go to the P&L account, 12,400 and what, 60. So when we add the credit side, now the credit side is also 15,400. So we come here to write our balance brought down, which is 3,000. So this is how to prepare the expenses account. So when you are preparing your trading profit and loss account and you get your P&L account, you write your rent and rates nicely. And you write this amount, not the one in the card book. So you write 12,400 and what? 60. That is all. Very, very simple. So this is how we prepare the expenses account. And when you look at the card book, you can see there is wages and salaries. But then here we are not preparing wages and salaries because we don't have any information on wages and salaries, owings or what prepaid, which means when we get to the P&L accounts, The amount you are going to write for wages and salary is the amount that was what paid to wages and salaries, which is 24,000. Simple. But then if we had wages and salaries always or wages and salaries prepaid, then it means there's a need for adjustment. But then if there is nothing like that, then it means that amount that it was paid, that amount that was paid for that particular period, so we write the same amount that has been paid for. So this is where you are going to end this section. If you've not subscribed to the channel, Rad Academy, kindly do so. Like and share to your friends to also have a benefit of this channel. If you have any question, kindly put it in the comment section and I'll attend to it. Bye bye. See you in my next video.